Hello again, everyone. Welcome to the Options Mentor. Well, here we sit at all-time highs again. This market is completely giddy. I'm sure you've all noticed when you go to the store and other places how great the economy is doing. Of course, I'm being facetious, but the market thinks it is. So, what are we going to do here? It's interesting that we still have the VIX over 20 while we're at all-time highs. Now that tells you, of course, there is still a little fear there. There's, of course, traders are buying puts, that type of thing to protect those positions because I think they know you're at all-time highs, great chance of a pullback. So you're still seeing the VIX elevated because when people buy puts, that does elevate the VIX, which is, of course, the CBOE's volatility index. So what can we do here with this VIX at this range? And we really have to be cognizant that you could have some pretty good moves. In fact, I looked, the market maker expected move for this coming Friday, the 18th, was $88. Now, theirs is saying they think on the larger end of things we could move that far. Sometimes they're wrong. It doesn't move that far at all, or it can move a lot more. But it's usually a fairly decent gauge of the amount of movement you might expect over that time period. So between now and this coming Friday, the 18th, maybe $88. So let's take a look at a position I've built here that's nice for higher volatilities. Why is it nice for higher volatilities? Well, because it is actually short Vega, which means that the volatility does happen to come down. Maybe we go a little higher again. Wouldn't be surprised, would you? That means the volatility could drop, and this could actually get a favorable P&L boost from that. Now, conversely, of course, if volatility goes up because the SPX goes down, it can drag it a little. But I have found this about butterflies, which is what this is, a double butterfly. I'll go over it here in a moment. Butterflies have a lot less sensitivity to volatility changes than something that's long Vega, say like a calendar or a diagonal. So I don't worry so much about volatility in butterflies, but I do acknowledge, it's there and you could get a little boost from it if it happened to come down, or a little pain if it happened to go up. But what I like about this double butterfly, and you can see here, I kind of manipulated it around to get pretty wide. So actually, if you look at the close here on Friday, 58.15, I'm actually up all the way up. What is that? 45 points higher. And I centered a fly. And then I bought a long above it, 60 points higher, 59.20, and bought a long below it to complete that upper fly at 57.20. Now on the downside, I went down about 65 points and centered the bottom fly, which, by the way, you could use puts or calls on either side. The 57.50 is the center, up 60, down 70. And what we have here is a butterfly with a lot of range. What if we do get that 90-point up move? Well, we'll still be inside of our butterfly. And if we get a 90-point down move, we'll also be still inside the structure. And with this non-directional type theta positive, you can see it's the first day, $18.86. That number grows. That's theta decay coming into your account. And that number will grow and actually be a bigger number each day because the closer options get to their expiration, the faster they burn off. It's not in a linear fashion. It actually accelerates towards an option's expiration. Now, you'll notice I went out here over 20 days to November 8th. The reason I do that is it gives us this flatter structure. If we come in closer, let's just say, I'll just change the dates here to November 25th. October 25th. So if I came all the way into, say, October 25th, I think you'll be able to see a big difference. Look at that. So that's not pretty. You see this daily line, the purple line, shows you be down a fair amount of money on the edges here. But if we just go out a little bit further, out to the 8th, then we get a nice smooth line, daily line, meaning if it does move against us or move in a larger range, we're not going to get hurt by it as much. That's a beautiful thing. And the thing is, we're here for theta. So if we're taking in about 20 bucks a day, what we're looking to do here, I'd like to get somewhere around an 8 or 10% profit in these butterflies combined, which means you'll have to watch the P&L because you can't put in a closing order for a double butterfly or an opening order for one, because the most legs you can have in an option spread is 4. So these trades would have to be put on and taken off separately. But what I do is I figure out what did I pay for it. So if I put it on here, looks like this trade would cost me around $2,600. So maybe I'd be looking for about a 250, 260 profit, which would be around 10%. So as you see, time goes forward here. You can see our profit grow with the time decay, and we could be at that level. It may take us a little bit here, maybe around the 24th, which, isn't that far away either. That I believe is a week from Thursday. And if volatility would happen to drop, we probably could get out a little bit sooner. I've seen these flies, sometimes, whatever it says here, many times you can end up faster. This is just a modeling of the theta. It doesn't take into account volatility changes. So that's my idea for this week, a double butterfly that gives us a lot of range. We don't have, too many volatility concerns. And with this trade, it's very likely we won't have to do anything to it. We'll just let it run around. And here, that's the thing. This is a very peaceful style of trading generally. If you put this trade on tomorrow, for example, and then you just check in on it a couple times a day, many times that's all you need. You don't have to stay in front of the screen all the time worrying about every tick, because you got all this room it can move in. Now, you can also use alerts, which I like to do if I'm going to be away from the screen. I'll put an alert and say, hey, if we get to 5,900, I want to take a look at this, or maybe if we get to 5,720, that type of thing. And then you can get an alert on your phone, or at least with many brokerages, you can get a text or email or both alert. And then hey, I need to look at this and see if I want to do something about it, take it off or adjust it or whatever that may be. So it's a fairly, the main thing about this kind of trading, whether you're using diagonals, double diagonals, calendars, flies, double flies, is let the thing go, let it run around. You don't have to worry about it like you would if you're doing zero DTE, you got to be there, you got to watch everything. With this, you can just check in on it. Now, as always with this, this has to be right for you, and it has to be something you understand and want to do. This is just education I'm doing here. You should always paper trade things, study things a lot before you ever even attempt to put them on live. And if you ever put them on live, I'd put them on very small. But I just like to educate people here about things you can do with options with your trading and what's available there. I try to cover a lot of the risks, the rewards, and as you do your research and you paper trade, you'll be able to see how things develop and see if that's something you're even interested in. If you do like this style of trading, every day I'm over at arimer.com. I have sessions there 5 days a week, every market day. And I have traders lounges, help desk, and just talking about what trades are working today. All those things. I also have some courses that I've taught over there that are available. All you have to do is go to the description in this video. You can see all my different links, my email address, everything. You can go to arimer.com/Mark and see my products. And if you want to join us over there, I have some very reasonable packages for you to be able to join us over there every day. And you can be hanging out with other traders, chatting. And sometimes that really helps, during the day. If you are around a lot, it's nice to have somebody to talk to about the market many times. So you can develop trader acquaintances over there, plus see what I'm thinking over there. And I think it's a great asset to anyone who wants to try to trade options in the market here. All right, well, that's what I have for this week, folks. As always, thank you for coming to my YouTube. It's been, the last month is crazy. It's really growing. I appreciate that. And I had a lot of comments. I think I had the most comments on a video, and they were good ones from my last video that I've ever had. I do like those, so please hit the subscribe button. Comment if you have something to say. I'll follow up over there with you. So have a great trading week, and I will talk with you later on. Bye-bye.